Hey, hey, hey. And y'all better not be thinking, hey, 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 it's Fat Albert. It's like, I don't care. Yo, this is Charles Tank Harris, your boy, the CEO and founder of the financial planning firm Wealth Our Way. It is Friday, September 11th, 2020. Before we get started today, I would be remiss if we didn't take a moment to remember all of those who were negatively affected, those who lost their lives, those who suffered through the lives being lost of loved ones, those who were injured, those of us who are just American citizens and citizens of the globe for that matter, who witnessed the horrific events of September 11th, 2001. So I'd like to start today's program by acknowledging and taking a moment of silence for all of the areas. I spoke this morning just in reference to New York City, but we want to talk about the plane that went down in Pennsylvania. We want to talk about and remember those who were affected in DC and everybody who was affected negatively on that horrible day. So I'll take a moment of silence now in remembrance of 9/11. Thank you for that. So today is the wrap. Well, it may be the wrap. Insurance is such a complicated topic, and we have one short day this week because of Labor Day that we may get into insurance a little bit next week. I'll let you guys decide. I want to let the people talk. So today we are doing our anticipated wrap. What's up, Big Joe? We're doing our anticipated wrap of life insurance, but it can definitely cover and carry into next week. I'm here for you guys, so whatever you talk to me about, we're going to go with. Before we get started, though, I want to make some great announcements that I feel are great announcements. I want to continue to educate you guys as to what this platform is about. So I am a financial planner. I have a lot of high net worth, high-end clients that I work with. I also have started Wealth Our Way to bring the same information that my high-end clients get to everyone on the financial spectrum, especially in the Black communities. We are the only firm that offers the same level comprehensive financial planning to people at an $80 level that other firms charge $15,000, $20,000, $25,000 for complete comprehensive financial plans. It's such an in-depth, overwhelming platform that I don't even solicit or go into it here, but I want you guys to visit the website and talk to me offline about getting more information. The reason I'm bringing it up today is yesterday I had a call with the people who are producing all of our financial coursework. And our coursework when we launched, so you guys may not even know this because I'm here talking to you now. And even though Wealth Our Way is up as a website and the company is running, and I've been doing this business for 22 years, the actual firm, Wealth Our Way, has a launch date of October 14th of this year. We're launching officially on George Floyd's birthday. We're launching in conjunction with George Floyd's birthday because I firmly believe that it's time for economic equality in this country, which is tied hand in hand with our fight and plight for racial equality. So we're making a big, significant rollout. In honor of that rollout, we will be naming 2 people from amongst the people who tune into the live all the time to receive our level 1 foundational Wealth Our Way package, which is normally priced for an individual at $80 a month. You will receive it for 6 months for free. And with that same theme in mind, I posted yesterday on the Wealth Our Way page that I have some solid followers who are here almost every day. My man Joe Greenwood is one of them, and I wanted to reward you guys who are, first responders, the first people to come up and start to listen to the content that I'm putting out. And so I'm on vacation, but I literally put 8 names in a hat. I pulled it out, and I hope y'all don't think that I'm biased toward my homie because this is my cat who won, but my boy Brian Brew Ravel won, and he had a 12% chance of winning. So congratulations to Brew. You're going to get the remainder of this year, October, November, December, 4th quarter, Wealth Our Way foundational platform for free. We'll talk about that offline. So for everybody else, don't feel slighted because most of the information that I do give is on the website for free. The attention level goes a little higher for those who are subscribers, and we do some things to improve their finances and literally save them more money than they're paying in their subscription fee. So that's what the subscription is about. But you guys can come here every weekday, get free advice. I'm also producing content every day. So there'll be webinars, YouTubes, everything is going to be coming out. This is the future of Wealth Our Way. So today we're going to wrap up this series on life insurance. We have talked about term. We've talked about whole life. We've talked about limited pay whole life. We've talked about universal life. We've talked about index universal life. Hey, love, how are you? So you said it's cool. What's up, Cheryl? How you doing, girl? We talked about all of these different forms of life insurance. Now, even though we talked about human value calculation earlier in the week, I believe that financial information is excellent to have, but more important than having the information is practical application of the information. So one of the reasons I have left the cushy comfort of the firms that I've been with is because they don't really provide you the freedom to speak on platforms like this to multiples of people. I can't scale and reach everybody. So I wanted to come on an online platform similar to the Dave Ramseys and the Susie Ormans of the world. The differentiator between me and those people that I named, first of all, hello, I'm black. Second of all, is I believe there's a lot of information that just gets thrown out there, almost like the no-load mutual fund companies that I tell people they should invest with because they're less expensive. But there's a gap between the actual information and how it affects the individual people. And that's where a lot of people get lost. There are questions that need to be answered because the information that may be good for person A may not be used the same way for person G. As a result, good. I'm glad your government name is safe here. The information needs to be disseminated on a personal level, and that is why I developed Wealth Our Way to bridge that gap. You get a lot of online content, but you also get a personal advisor to walk you through. Hey, Miss Dawn. So the reality is that when I'm talking life insurance and how it can affect people, I want to make sure that you guys who are especially the staunch supporters of this early launch of information are getting the best practical use of the insurance. So yesterday I told you, get as much term insurance as you can afford and get permanent insurance to the extent that you want to make sure you're covering your final expenses. You want to make sure you're covering the burial. You want to make sure that you're covering any credit card balances that you leave. And then leave enough money for people to get drunk and pour something out in your memory when you're gone. The other thing is, if you are growing and building a business, homes, things that will make you actually have an estate. So right now, the estate tax, the exemptions are so high for us that the majority of Americans, the vast majority of Americans, will not have a federal estate tax issue. We may have an individual state estate tax issue because those are relatively low. I have clients in New Jersey, for instance, who have an inheritance tax looking at the people who get their assets, a simple house, any business interest, cars or whatever, puts them above the exemption right away. So it's good to have some insurance in place when you pass away to pay those taxes. That's a matter of planning that's at a higher level. For 98% of us, we need term insurance during our formative years when we have children or a spouse that depend on our income. And then we need a small amount of permanent insurance for when we're older and we pass away. And I like to use some form of universal. If a budget is the issue, we need to keep the cost down. And if we have more money to put away, then I'd like to use whole life. That's going to bring me into a topic that I want to talk about today about whole life. And I recommended this in the first session of the week. I believe in juvenile life insurance policies, basically taking out life insurance policies on children. In fact, for kids who are very, very close to me, my godkids, my nieces, my nephews, that's the first gift I give them is a whole life insurance policy or a limited pay whole life insurance policy. So we got to talk about stigma in our community. And it's not just limited to our community. There are a lot of people who are, quote unquote, afraid of buying life insurance because they think it means I'm talking death into existence. I'm going to wish death upon you because I'm insuring myself. I hope you all know that witchcraft does not exist and that is hogwash. So when I was a child, the thing you bought children were savings bonds, double E series, double D series. These bonds paid very, very little interest, even though interest rates were higher, as we discussed the other day. When I was born, it was the 1970s. These were bonds that you would buy at a discount. The bond may say it was worth $50, but your grandma paid $32 for it. And then when it matured, you got $50. And that was great. It was a tool. I'm not going to be a hypocrite. I told you the other day, there are no such thing as bad financial instruments, just bad financial marriages sometimes. Well, the thing to me that makes the most sense is buying a cash value life insurance policy for a child. Why does that make sense, Tank? Let's go through the reasons. Reason one, insurance will never be cheaper than when you are young. You know, I told you it discriminates against age and health. Babies have the least insurable cost of every one of us. So you're locking in cost at a very, very low age. Second reason I find it to be helpful is if you're getting either a whole life or a limited pay life insurance, you are able to use this to teach your children how to save. So my kids have both. My kids have a whole life policy and they have a limited pay whole life policy. For the whole life policy, maybe I'm paying $50 to $75 a month for a child. I'm going to pay it until they graduate from college. And then I'm going to come to them and say, hey, I've been putting away $50 a month for you for the last 23 years. Now it's your turn. My kids should have a financial understanding, because I'm a financial planner, that some money should go to savings, some should go to investments. I tell them to consider this their savings portion. If you look at the current state of savings in America right now, there is no incentive for any of you to save money at a bank. And I have that argument with my clients all the time. They say, Tank, why should I put money in a savings account when it's not paying me anything? I'd rather either A, spend it, or take the risk of putting it more into my investments, because saving it's not paying me anything. So imagine though, if 18 years prior, someone would have had the forethought to give that person a whole life insurance policy, and the dividend rate on their whole life insurance policy is hanging around 5.5% tax free. Find me another savings account that I can put money in and get 5.5% tax free. Also remember what I told you yesterday. Insurance is expensive loaded in the front end. So by the time your kid is 22 years old and you're handing it over to them and telling them to put $50 a month away, all of the expenses and the charges and the sales charges, all of that have been paid by you already. So they are literally putting $50 in, and in a year, they are seeing more than $50 in their account because of the growth. You don't have that ability anywhere else in America. So those are two reasons. The fact that you can get it at a low cost, you can teach your kid how to save. The next thing is you lock in your child's insurability. 5-6 years ago, one of my fellow Temple family called me up to get insurance on herself and her child. When she called me to get insurance on herself, she discovered through the underwriting process that she had an ailment that prohibited her from getting insurance. The child is susceptible to getting the ailment but didn't have it. So fortunately, we were able to get her underwritten. But you know, in our community, we got high blood pressure, we got diabetes, we got that sugar, we got the gout, we got all these different things, heart disease, and it passes down to our kids. So we want to make sure that we are locking them in sooner than later for insurability. I'll get biblical for a second. I'm gonna misquote the Bible, I always do, but God forgives me, He knows I love Him. They say that a wise man leaves an inheritance for his children's children. So the one thing that makes me very proud is that I have 6 children. Each of them have at least $250,000 of life insurance. My grandkids, who I have not met yet, I've laced them already. And it didn't cost me much at all. So that's another reason for doing it, and getting ahead of insurability, also leaving an inheritance, building a legacy. We're talking about building legacy wealth here. Now I'm gonna get real personal for a minute as a black man. I look at the city of Chicago, Illinois, and I know you're not supposed to pronounce the S, Chicago, Illinois. And I see the murder rate in the inner city. I see young African-American men killing young African-American men. I don't blame them. I blame the fact that there are even guns in the community, but that's a whole nother soapbox. But the reality is this: young black men across the country face a hurdle of seeing themselves as valued, seeing themselves as making a difference, seeing themselves as having a life worth living. Could you imagine the change in mindset of these black men, these young black men, if they knew they were insured for $250,000, how they would carry themselves differently? I'm gonna take it a step deeper. Can you imagine if all of a sudden 10, 15, 20% of young African Americans when born were being insured, how the white CEOs of these insurance companies would lobby to change gun laws, would lobby to make things safer so that they're not writing checks en masse when young black men are getting killed? These are the way we can make social change, because I tell you, in this country, this is a capitalist society, and the thing they understand more than anything else is money. So I look at life insurance as a way to instill value in our community, to make sure that we are recognized as not just individuals walking around lifeless and being conceived as a threat or as trouble, but being valuable assets in our community. Another reason for establishing juvenile policies are what you're going through right now. So I want you to personalize this and think, hey, thank God for Tank. You guys may say, that's my guy, he's going to give it to me straight. But how many of you have sat across from a salesperson, felt inferior, felt lack of knowledge, and wondered if you're hearing the right thing? Wouldn't you love to protect your child from that? When your child is 35, 40 years old and they already have $300,000, $400,000 of life insurance, they don't have to have that conversation with anybody. They don't have to worry about it. Dad, mom took care of that for them already. So that's another reason to put these things out for our children. So that's my soapbox on juvenile policies. What's up, Brew? I don't know if you heard, but you won. So hit me up a little later on. We'll talk about it. So juvenile policies are a great way to save for the next generation. They're a great way for us to put our children on a spectrum and a launching point toward financial freedom and independence. A couple of other things I wanted to touch upon as it pertains to life insurance this wrapping up period. So we talked about index universal life policies and universal life policies. I talked about how much confusion they cause because they have so much flexibility. When you are looking at a life insurance policy, we discussed guaranteed versus illustrated. Always look at what numbers are being illustrated to you. This is of particular interest when it's an index universal life policy. They passed a law, the insurance industry passed a law last, you can't use hose on my broadcast, my man. You can't say that word. So the reality is that when you are illustrating things to the consuming public, you cannot put numbers on there that you know are unlikely to be met. So there was a rule passed last year called AG 49, and AG 49 basically set the guidelines for what an insurance agent can come and present to you as what they anticipate your return being on your policy. So also know this, the limit I want to say is 6% or 5.91%, I'm not really sure. I tell people, if you're seeing an illustration that is higher than 5%, you might want to look at it twice, because you got to think about this. Once again, these illustrations are based on what the stock market does. Stock market historically returns 10%. The insurance company has put a cap on your return. So they're normally capping you at, say, 8%. And then some of them have participation caps and say you'll get 90% of what the market returns. So 90% of 8% is 7.2%. That's the maximum you can get credited for in a good year, great year. Zero is the least you can get credited for. But then again, the policy has expenses in it. Normally, index universal life policies tend to be some of the most expensive policies out there. The policies can average between 2 and 3% a year. So now our downside is -3. Our upside is 4 and some change. So, or 5, excuse me. So if someone's illustrating you that the average will be 5, 5.5, logically, you know that's not going to be true. So you really want to be careful when you're looking at illustrations to make sure that what you're being sold and told is really what's likely to happen. So with that being said, I am going to wrap today's segment up. This is the shortest I've ever been. This is 18 minutes for 15 minutes of finance. And I spent 3 minutes talking about stuff that wasn't finance. So I actually think I gave you guys 15 minutes today. I want to invite you guys to ask any questions, whether you do it here in this forum or whether you do it in my inbox or whether you go to Wealth Our Way. I also would invite you to go to the Wealth Our Way website, sign up for Contact Us. You'll get a monthly video or a monthly newsletter. I think anybody who knows me knows by now that I'm not an overwhelming solicitor of people. That's not what I do. I invented this website to provide information, provide a platform. I'm so excited about the financial literacy software that's going to be on the site. Literally will give you guys coursework where you will get certificates when you're done the courses. I am investing $15,000 of my own money to put this information on the site. To date, I've spent tens of thousands of dollars already in the site and in staff to launch this company, because I am convinced that this is what God put me here to do. I've made so much money selling financial services and financial advice to high net worth individuals over the last 22 years, and I will continue to do that because people got to eat over here. But this platform is where my passion is. So I do these videos, I'm building up my YouTube catalog, all of these things so my people can meet me by the river and we can all be ready to transfer generational wealth to our people and just close this racial wealth gap. So I invite you guys to stay tuned. Next week, I'm going to figure out what next week's platform is going to be. I'll be traveling again next week. I'll be in LA and Georgia, but you guys will see me here at 12:30 Eastern time every day, I promise. And hey, what's up, Newt? And I just want you guys to have a great weekend and start thinking about ways to become wealthier in your mind first and then in your pocket second. And I'll give you all the tips that you need. You guys have a great weekend. Love you all. Peace.